If I told you that one tiny company could be about to change the energy industry forever and that it's trading for just $1, would you be intrigued? This little-known Aussie company says it's found a way to transform fossil fuels into clean energy. Think about that for a second. That's huge. Currently, this company is so small that hardly anyone knows about it, which is why its stock is still so cheap. And that means there's the potential for incredible returns if and when this company's tech goes mainstream. This clean energy breakthrough stock is just one of 7 promising Aussie companies on our radar at the moment. To get the full details on all of them, click the link below now.
Hi there, welcome to the closing bell on the 30th of October. Pretty interesting week this week, wasn't it? With huge moves in the bonds, especially the Aussie bonds, with those 3 years getting smashed. So I thought we'd start off by having a look at that so you can get a sense of just how big the move was. And obviously stocks have reacted today negatively. We got another day this morning at 11:15 a.m. with the RBA on the Friday, that's yesterday for you, not supporting the bonds again. And those 3-year bonds got really hammered. And we saw stocks take fright as well. And we've seen quite a sharp sell-off. Market is just about to close for me. It's about 350 on the Friday afternoon, and stocks are down around 110, 120 points. So things are afoot, aren't they? So I think it's a good idea to just have an overview of what's going on. I'm not going to give you a stock this week because I'm a bit concerned that we may see a bit more selling pressure. We have the FOMC next week, Tuesday and Wednesday, where they'll come out with their taper announcements. Watching the 10-year bonds, how they move is going to be interesting. Whether there's short squeeze going on or whether there really is serious buying in those 10 years. Our Aussie dollar is flying on the back of interest rates here, looking like they're going up. So lots of things going on, and I think it's good to be across it so that you can get a sense of how you might need to sort of adjust things in what you're doing. So let's start off with these 3-year bonds. I want to give you a sense of the size of the move. This chart here is a monthly chart of the 3-year futures. And the way these futures work, you can see the numbers on the side there going from 87 up to 100. And all it is the yield. So the number 100 minus whatever the yield is on those 3-year bonds. That's how the bonds are priced. So when you see 97 here, that 97 corresponds to a 3% yield on the 3-year bond. So that gives you a sense. This chart going all the way back to 1987. So that's from a point when, yields were 15% on those 3-year bonds. So we can see really a whole generation of this rally in the bonds and the yield falling. So you can see with this top right corner of this chart, and if I go in nice and close for you on this last few years trading, you can get a sense of the fact that we were running up against a 0% yield on these bonds. So there's 100. That is basically saying a 0% yield. You can see that when we had the COVID crash, they came out and said, look, we're not going to raise rates till 2024. So those 3-year bonds really should have a nearly 0 yield. And so this is what's been going on with these 3-year bonds just sitting up near the 0 bound for so long. Now, in the last month or two, they just started to sell off slowly. They were going above the level where the RBA had said they'd be keeping rates. So the market was there scratching their head. I'm sure there are a lot of traders probably buying the bonds, thinking they've got the RBA backing them up. The RBA would come in, sweep in with printed money, buy those bonds and take the rate back down to 0.1% or whatever it was. And this is one of those things that happens in the market every now and again. The RBA didn't do what everyone expected, and they've not stepped into the market to support those bonds. And so all those people and institutions and banks and whatever who would have been long those bonds thinking that it was a pretty easy trade, all of a sudden it's not the case. And we've seen this absolute plummet. This is on the monthly chart with the yield rising from near zero, where it is on Friday afternoon is around nearly 1.5% yield. So that's been a really massive move. And really, if we just have a look at the weekly, just so you can get a sense of what's been going on and the size of the move, you can see that in the last few weeks, they have been under pressure. So the market has known, with all of these inflation figures coming out, there was already pressure there on the RBA to either step up or blink. And we got to this point. We've got the taper coming next week, potentially, signs that rates will rise over in the US, possibly even late next year. So really all the pressure was on the RBA to change their view of just not doing anything till 2024. I think the market was calling their bluff. And yes, they blinked this week. And so this move here is the range for this week, going from, around above 99, so less than 1% yield, to 98.5. So that's 1.5%. So we've seen a 50 basis point increase in yields in those 3-year bonds this week. And that is pretty huge. So that has had an effect on stocks. If we have a look at the XJO, I want to show you the monthly because I think that's the most interesting thing to look at. Now, I've been looking at the monthly on the futures, and we didn't actually get a monthly sell pivot last month by 2 points. So I was sort of looking at the market as from the point of view of, well, we haven't had the sell pivot yet, which is what I need to see before I start to bear up. But when I look at the XJO, it's absolutely clear. And the XJO being the ASX 200 index. So this is the actual index itself, the pricing of the index, and not the futures. And you can see on this monthly chart, we have the old all-time high there prior to the COVID crash. We've got the big rally that we've seen on the monthly chart here. You can see prices just marching higher, no signs of anything turning down. And last month, with the monthly close there below the low of that highest price candle, there's your monthly sell pivot. So that's the first thing I need to see before I would say prices are turning down. So let's just go in there nice and close. And often what you see once you get that monthly sell pivot is prices will often rally, as they have during this month, rally looking like everything's all good. But then if the selling pressure comes back in without, turning back up and creating a monthly buy pivot, that's sort of the area where the selling pressure can come in, and it can actually really tip over from there. And I have been saying for months that what I'm most concerned about with the way the ASX 200 looks, if we look at that long-term chart, is the old high from 2007, and we've also got that high from prior to COVID. If this market does tip and you create that false break of those highs, you can just really easily see quite a big sell-off, all the way back to that 20-month moving average, for example. So I'm not necessarily saying this is what's going to happen. I'm just saying that the setup at the moment is that we've got a few boxes ticked here. And with the bonds doing what they're doing and taper coming, going into the end of the year, the way this is now set up is saying that the risk is to the downside right now. And we've got a lot of dominoes set up. If the market does actually sell off through here and crack below that pre-COVID all-time high and sort of confirms that false break, Yeah, it can really tip over pretty rapidly. And I think the catalyst that we're seeing is these bonds moving around and watching those US 10-year bonds, how they move. We're seeing the flattening of the yield curve. Some, I think Czech Republic, a yield curve actually going negative. So it's calling that a recession is coming, and really worldwide, a flattening of the yield curve where short rates are going up and those long bonds, the 10-year bonds, the rates are going down. Now, with inflation going up, you'd expect those 10-year bonds to be, the yield to be going up, not down. So that's saying that really the economy can't handle, or has so much debt on board that it can't handle rates going that much higher. That really the market's saying they might raise rates and the economy won't be able to handle it, and things will tip over pretty rapidly, and then they'll have to take them back to zero again. So that feels like that's what the market is saying. So really, it's very interesting state of affairs at the moment that, you know, the Fed coming out and taking away the punch bowl after massive stimulus for so long that's created these incredible rallies. Worldwide rates near zero, which is something I never certainly got taught about when I was at uni learning about economics, that we'd have worldwide rates, many of them negative. It's a crazy world we live in, but you just get used to whatever you end up being in, I guess. But we're at a place where, you know, things could get a little volatile as the Fed tries to step away gently from all of this immense stimulus that they've been doing. And the technical setup is certainly saying in the ASX that, you know, it's time to be a little careful. So I'll just go into the weekly just to finish off, just so you can get a sense of what I'm talking about. If we go into the weekly chart on the SPY, which is the futures on the ASX, just to show you what I'm sort of seeing here very quickly. As markets turn down, and if you've been watching these videos for a while, I was sort of saying a while ago, you know, it takes time for things to actually turn down. You know, it doesn't just go from going up to going down and just sell off in a straight line. It doesn't do that. It shakes everyone out, gets people bearish, shakes them out all out, gets people bullish, and it sort of thrashes around for a while. But the way it's set up is that we've already seen a bit of a sell-off from those highs. So, you know, the time has been taken to really set this up as potentially turning down. If we just quickly show you, you know, the way that these waves develop. I've been, you know, telling you how prices create a wave, you know, rally back up. We've got the sell zone there, right? And then that's the spot where we get this next wave from. So if we're just following along with these waves and analyzing what's going on, if I just show you this next wave down, which happened during September, October with that sell-off, you can see with this next wave, I mean, how have prices moved? You know, we've got the buy zone of that wave there, and we've got the sell zone here. And what we've seen is some thrashing around where prices came down into that buy zone of that wave. We've had a rally, which got everyone bullish again. It's gone right up into the sell zone of that wave. And now, you know, yesterday was the daily sell pivot, and today was the down 100 odd. And where did it go back to? Straight back to the point of control of that wave. So it's all sort of behaving in a way where really I want to see it back above that all-time high, because it is now starting to take shape that this could be rolling over. And back through those lows from last month, all of a sudden, yeah, it's going to look like the trend in the short term really is down. So that's really what I wanted to focus on, was to give you a bit of a overview to get a sense that you know, the way things are moving, it's something to take notice of. Next week could be quite interesting. I want to see how all of those bonds act all across the whole yield curve in Australia and in the US. And gold is frustrating me, the fact that it's not moving. I think maybe the market's saying inflation really isn't the problem, that it's a supply crunch and really the supply lines are all clogged up. That's what's causing price pressures, and that will ease in time. So inflation's maybe not what the market's that worried about. It's more worried that the Fed's going to have a policy error, raise rates too early and crunch the economy. So that's what it's sort of seeming like at the moment. But next week is the thing to focus on. So I think it could get pretty interesting, and tread a bit carefully out there. All right, well, that's enough for this week. Check out what I do below, click those links, and check out my Australian Small-Cap Investigator service and Pivot Trader if you really want to get into the nuts and bolts of my technical analysis method. And otherwise, I will come back with more next week. All right, cheers.